Today I'm chatting with Kelly Malcolm from Borealis Mining, who's focused on advancing the Borealis Mine in Nevada's Walker Lane Trend, a top-tier mining jurisdiction. The fully permitted project includes extensive infrastructure such as heap leach pads, an ADR facility, and high-grade exploration targets, with historical production exceeding 600,000 ounces of gold. Led by an experienced team, Borealis is actively drilling to expand resources and preparing for the resumption of mining operations. The leadership is led by Kelly, and today we're going to get his thoughts on how he plans to get it back into production. All right, everybody, enjoy the interview. Kelly, thanks so much for joining us today.
Thanks so much for having me on. Really appreciate it. Great to be on your show.
So let's start off with just talking about gold. And I like to start off with this question because you have worked for gold companies in the past. I see you were a big part of Detour, which, as I understand it, is the largest operating gold mine in Canada today.
And will
now,
be going forward.
and now you've got a company that you are taking into production, a new asset in Nevada, which we'll get into. But you've worked in the gold industry for years, and I'm curious, what are the things you think about that get you excited about gold and make you say, I want to stay in this industry and I believe in gold?
That's a long question, long answer, but we'll go quickly into it. So the few things. Number one, geologically, which people probably don't bring up, I find gold systems really, really interesting because there's a big, it's a lot of really interesting geological things that go into creating a good gold deposit. So I was really intrigued by them once I was in university and started working for Detour Gold as my first summer job. On the macro level, like, look, you probably have much more intelligent macroeconomics than I, but I do see inflation just rampantly attacking everyone's wallets and everyone's bank accounts lately. It is a store of value and a store during stable times or for more stable times. And you see today, Ukraine and the conflict there, and gold goes up. Unfortunately, it's positively correlated to negative world events, but I do think that we're in a bit of a troubled environment, both economically and politically. So I think gold's here and on its way up for the time being, for sure.
Now, you mentioned that your first job out of school was with Detour Gold, which ended up becoming the #1 operating gold mine in Canada. How did that happen? Do you think that it's changed your perspective on how easy mining is?
Hey, it certainly looked easy when I was there. My first ever gig was a dirt bagger. I was hired because I was my previous jobs were on farms, and I was a big, strong lad, and I could carry a lot of samples on my back. And we literally went out every single day in a helicopter, which was the coolest part of the job by far. Got dropped off in the woods and grabbed dirt samples and took them back to the office. But I was there when that mine was being built, and I had no idea on a relative basis about how incredible that operation was and how large scale and how altogether impressive it was. It was just a regular gold mine to me because I had such little experience, as you mentioned, with smaller operations. So I guess I was a little bit spoiled out of the gate, yes.
Yeah, it's there's thousands of mining companies you could have gone and worked on, but that's the one you started with, which is pretty cool. So Kelly, it's the first time we've had you on the show, and like I said, you're a part of a new company called Borealis Mining. What's the high level overview of the company? Where are you guys mining? What are you guys looking to do? What can you tell us?
Sure. Nevada focused. We put this together. I bought the asset in April of 23, financed it quite successfully during what was an ugly gold market during 2023, raised about 16 million there ahead of going public, brought in some great shareholders. The project that we bought itself is a fully permitted mine, and I know we're going to talk about that in a bit, but fully permitted, ready to generate revenue and ideally generate free cash flow. And our business plan is to resume production in the near term, explore and expand upon the known mineralization, but also we are aggressively looking for external acquisition opportunities, whether it be property packages, companies, We're looking to grow our package and become a mid-tier mining company in the next few years.
Okay, so you guys have permits for a massive 55,000 ton bulk sample, which honestly doesn't even sound like the word sample is appropriate when we're talking about 55,000 tons. When do you guys plan to conduct this, and what's the goal that you guys are hoping to get out of this?
Sure. So the 55,000 tons is an underground bulk sample. That relates to the drilling news that we put out last week. In terms of what we're permitted to extract from our mining permits, it's millions of tons. We can go mine millions and millions of tons of ore. We've got the nearest term thing that we'll do is we've got a stockpile of 330,000 tons that we intend to crush, stack, and put onto our leach pad for the purpose of heap leaching. The 55,000 ton underground bulk sample is something we're looking at in the future, perhaps 2 or 3 years out from now. But in terms of resumption of full-scale production, we're hoping that gets done in 2025.
So, what do the current exploration plans look like?
Right now, we've got an RC drill rig on site on the western side of the property in an area that we call JRCD on our corporate materials. That was an area, it was kind of like a little quarry. It's really neat. They quarried out high-grade pods in the late 80s when they were kind of closing down shop and just looking to cherry pick whatever else they could before they rehabilitated the mine. So they mined out 50, 60,000 tons from two of these gold deposits. And what we're doing right now is working to expand upon this known mineralization. In terms of the real exploration where we look for the next big thing, that won't happen until about June or July of 2025. The reason for that is when we acquired the project, we acquired boxes and boxes and trailerfuls, to be honest with you, of data. And we took all that information. We spent the last year or so compiling that. We've hired 2 consultants that are in the final stages of compilation of that data, and that'll guide our real regional exploration campaign, which we expect should launch around July of 2025.
The mine was in operation for 2 years in the early 2010s and then again in 2021. What happened here historically? Why were there problems? Why weren't those past operators able to stay in production? And how are you guys going to fix this?
Great questions. And I'll take a step further back to the 1980s so this was found in the late 70s, really quickly permitted and started mining in the early 1980s. And that lasted for a decade. That it was a free cash flow machine, a highly profitable operation at the time for Echo Bay Mines. Gold then was $300 an ounce, and they shut the mine down once they had depleted the easy stuff that was in front of them, rehabilitated it all. And then around 2006, a company called Griffin Gold picked it up, did some drilling, had some great results, but then gold started ticking upwards and upwards and upwards, and they decided that they wanted to resume the mining operation. So they re-permitted, they did a pre-feasibility study, permitted the whole mine again, and rebuilt the whole mine. Got back into production for not a very long time at all, a few months, and then ran into financial difficulties. I would say not owing to geology, although they were reprocessing in order to get the easy stuff out of the ground. They were reprocessing a lot of old dumps and heap leach pads rather than necessarily going into the existing pits and extracting fresh ore. Then they ran into financial hurdles. Some of their machinery broke. They took on some debt. That debt they weren't able to actually pay back, and within quite a short time period, they were bankrupt. The mine was then transferred to the debt provider, which was a private equity firm called Waterton. So that's the reason it didn't work the first time you asked. And then they resumed mining after they had won a lawsuit from the previous company who sued them for saying that they acted poorly in the way that they acquired the asset. And in the middle of COVID, 2021, full mask on, social distancing rules in full effect, they decided to resume mining on the 2011 mine plan. So without optimization for, let's look at diesel costs, for example, which had doubled in that time period. Look at gold prices, look at inflation. And it was just in my eyes and in our team's eyes, it was just kind of a haphazard effort. And they mined for a few months and just abandoned ship. And that's why we have our 330,000 ton stockpile. They had mined that and put it and just didn't even bother crushing it. They had just given up essentially on the asset at the time. And this was also the same time period that they were starting to wind down their fund and selling off all their assets. So just kind of fortuitous timing that that they had given up then, and that's basically when we came knocking on their door, thinking that we had an interest in buying it. And in terms of what we're going to do better, we've really optimized this thing internally. We're looking at profit maximization over revenue maximization. So looking to maximize the amount of money we can get out of the ground, not necessarily the amount of ounces, and looking for very low capital cost ounces, and the lowest operating cost possible.
I'm curious because this is something that I've never actually chatted with anybody about before. And I know that there's a tendency in when we're talking about public markets versus private equity investors are typically, they're going to be all on board for profit maximization because obviously that's the thing that makes the
They
most
do,
amount
yeah.
of sense. But when we're talking about public mining investors, they tend to be very short-sighted and they care about things like how many ounces did you produce? How do you plan to message that to the market, or how have your conversations been with investors when you try to focus on profit maximization and trying to get them to understand that?
Really good question, and that's a fun one that always comes up in interviews. And what I tell people is that we're trying to build a 1980s or 90s style gold company. Ever since the 2000s, and coincidentally, Detour, Malartic, all these big, huge producers, Barrick and Newmont, ounce production, like you mentioned, has become a major hot topic of conversation. Although when you look at financials from a lot of these companies, yeah, they're producing a huge amount of ounces. They're not actually making a big amount relative to what's coming out of the ground. So guys like Rob McEwen and Eric Sprott, I tell them that and their eyes light up. They're like, oh my gosh, this is perfect. This is what we love to hear. We don't care about the actual number of ounces. We want to make money out of the ground. It depends on who the audience is, but we've been pretty consistent in our messaging. And we'll talk about our M&A strategy quickly here, if that's okay, because it ties into this really well. We're looking for projects that can generate free cash flow. We're not looking for big assets because anything over 1.5 million ounces, the majors want because it can generate that large ounce profile. We're looking for things that have really robust economics, low capex, and can generate free cash flow. And the idea is if we have 3, 4, 5 assets that are all doing 15, 20, $30 million per annum free cash flow, all of a sudden that becomes quite a significant business. And you should be valued quite positively um, on a cash basis, trading on cash versus ounce produced basis. So that's the messaging we've been pretty consistent with, is that we're looking to maximize dollars, not maximize ounces. And most people are pretty cool with that once to the specifics.
So let's just quickly touch on your share structure. What's the price that you guys have raised most of your money at, or the prices? And are there any investors you can talk about that are well known that are worth mentioning?
100%. So there's 83 million shares out at the moment. We raised most of our cash at the 50-cent level. That was part of a 50-cent unit financing we did. So there's 16 million warrants that correspond to that $16 million. So we raised that, like I said, 50-cent unit with a 75-cent half warrant. Earlier rounds, there's a 30-cent placement that we did in June of 2023, and a 2 and a 5-cent kind of founders round that we did way back when, 2022, and all that stock is locked up. So the only stock that's available for sale is the 30-cent and the 50-cent financings that were done. So that's the entry point for most investors. And in terms of notable investors, Eric Sprott owns a big position. He's got 7 or 8%. Rob McEwen has a huge position in the company. He owns 16%. And a number of different big mining funds that I won't bring up because they're not over 10%, but really, really well-held story.
Okay. Last question for you. If I'm an investor in the story or I'm watching the story thinking, okay, this sounds interesting, what am I looking out for out of the company over the next 12 months?
12 months, that's a good outlook. Production resumption, I would be very, very disappointed in myself if we're not back into full production by, call it the fall of 2025. I'm hoping it happens sooner than that. And actually making some money. I'd like to see at least one acquisition, ideally two or more in that time period. But again, it's hard to put timelines on those things. But certainly you'll see one transaction occurring in that 12-month period. And drilling results. We're going to start getting pretty aggressive in the exploration side of things, like I mentioned, around July of next year. And in the interim, we'll have lots of drilling to come out of our ongoing expansion and confirmatory program. So there's lots of fun things to look forward to, but drilling, M&A, and production by far are the most exciting of the three, or of the bunch.
I just kind of have one question that's been actually bouncing around in the back of my mind for literally 4 weeks now.
Sure.
Why do you think it is that right now the major trend is I need to get several million ounces of gold before I even consider moving forward to PEA, pre-fees, feasibility, and potentially production? Like, to me, a million ounces, that's 20 years of production at 50,000 ounces a year.
Yep.
Why is that not enough for so many of these companies these days?
The challenge is, so in a private market, that'd be a wonderful project to have. The problem is, so let's say a 1 million ounce deposit. Yeah, 1 million ounces. Let's say you're in Timmins with half open pit, half underground. Your capex for that, because you're in a good area, would be, call it $200-300 million. Sadly, the market doesn't attribute a real valuation to that 1 million ounce company, so they're going to be trading at $15-20 million. So for them to actually raise the capital to build that $200-300 million operation is essentially a company killer. Whereas if you have those world-class 3, 4, 5, 6 million ounce deposits, you can garner the valuations required to actually build it. I think for a major, if they find 500,000 ounces, they're going to go mine that. You look at IM Gold, they find that, they'd mine in a heartbeat. Barrick would even do the same. It's just the unfortunate nature of public companies and valuations and dilution. But I'm with you. 1 million ounces in the even early 2000s was considered a world-class deposit and would be brought into production immediately.
It's just one of those things that's irritated me the last. So, just as a bit of a background, we've been doing earnings videos, and it's there's a lot of producers that are sub 100,000 ounces a year, and
Mhm.
oftentimes they seem to be doing far, far better
Then the big
than
ones.
the majors. So it's
Yep.
like it just seems like such an underappreciated area, and I don't get it.
So Jordan, honestly, our strategy is exactly that, because I think there's real, like we're working on a few at the moment. Like I'm hoping we can get our first deal done relatively quickly. I don't know when that will be, but hopefully in the relative near term. Um, and your thoughts will be mirrored exactly if you watch our news. If and whenever we can get this deal, one of these deals done, you'll fully understand, or you, yes, I'm aligned with you fully on that there's huge money to be made on these smaller things. The difference with us is we've got the currency at the moment that we can actually go build these 30, 40, 50 million ounce capex projects, where the companies that we're looking at and they're trading at 5, 10, $15 million valuations just can't raise the capital. So the shopping list is vast, and the level of interest from the potential targets is they've all pretty much given up, because they think that their assets are great, there's real value there, but they just can't get the price to move, which um is necessary, right, to build these things.
Well, I appreciate your strategy, simply because I look at the all-in sustaining costs of some of these majors, and it's just why bother? Like, okay, you're putting up big numbers, but you're putting up big costs. So at the end of the day, you're no further ahead.
Yeah, I agree. And that was the strategy of a lot of these producers in the 2010 era. Like you saw a huge amount of acquisitions happening, and it was done solely for ounces and ounce production. And then you saw those all-in sustaining costs exceed the price of gold across for these assets. And then that huge write-down that happened through 2012 to call it 2016, 17 from a lot of these majors that just had assets that just didn't make any money. So I think that you've got to pivot to this profit side of the business, and you look at like Gold Corp when it first started in the 90s. That was their focus, was high margin ounces, and they kind of pivoted away from that and went the ounce route, and their overall financial performance suffered during that period. So I think yeah, I'm like-minded with you in that smaller high margin projects, if you have a few of them in one basket, should yield a much more genuinely profitable company. And if you look at it like I use the example, my dad owned a garage growing up. He wasn't looking to maximize the amount of cars that came through his door. He was looking to maximize the amount of money that he could make. So I don't see why mining should be treated differently from a conventional business, right?
Well, Kelly, thanks very much for hopping on here. I think that you guys have a pretty interesting story. Certainly, there's a lot of talk about it on social media, and hopefully you'll hop back on here on the future as you guys roll out on your strategy to update us on how everything's going.
Would love to. Thanks so much. Really appreciate it.
All right, everybody, thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let us know what you think in the comment section. Thanks, everyone.